What's going on? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job on the road options training course. And we're going to go into the weekend stock market talk for May 22nd. We're going to talk about kind of what happened over the past week and what could be happening over the upcoming week. So let's go ahead and get right into it. So what we're always going to start off with is the S&P 500 index seasonality. We talked about before that this is normally the month of May is normally known to be very volatile. We probably will come out of that maybe on an upswing. Let's see if we follow that particular pattern. Dip a little bit as we go into June, and then go into June on an upswing or on an upturn or uptrend. What I want to look out for June, and I'm going to kind of talk about that today, is that based on the seasonality, I think we're going to see a really strong dip in June. And we want to kind of try to observe what we think the justification for that dip is going to be, but we want to kind of look out for a dip. So leading out to May, we're going to probably look for an upswing, and I'm going to kind of go into why I think that's going to take place. As we go into June, go into an uptrend. I'm sorry, I keep using the term upswing and uptrend, and then look potentially for a big drop off of the S&P going into like maybe mid to late June, right? So let's go ahead and look at some of the SPY. Look at that major index. So we still have this as our support. So in looking at it, let me zoom in a little bit. We see that, we went under what we were calling our support. That became our resistance. We went up over it, came down under it, and now we're up off of it. So it's become our support again. So we talk about before support and resistance. Your support can become your resistance. Your resistance can become your support, vice versa. It kind of all depends on the activity that particular day. So what we want to do is try to determine, are we going to continue to move up right towards the end of this month, or are we going to just hit this line and kind of ride it? We got about a week left in the month. So we don't have a lot of activity. We only got another 5 days. And then I believe that the first day of the week out of Memorial Day may be a market close. So then we got a shorter week going into June. So we just want to continue to observe it and try to figure out how we're going to bounce off this line. One of the things that I'm looking at is when I look at their options market. So we're looking at May 24th. We're seeing a lot of people closing out of positions, right, on the call side, going all the way out. So we're seeing a lot of people, for whatever reason, are closing out, but we're also seeing the same thing on the put side. So we're seeing people getting out of positions on both sides. We're seeing good volume, but a lot of selling, a lot of people getting out of the position, right, and not people adding to the position. Okay, that's for May 24th. We're seeing the same thing on May 26th. We're seeing red, people closing the positions, not adding to it, on also the call side, but then also on the put side. So that's very, very interesting. So we want to try to understand why so many people are getting out of both sides. Do they think that this thing's just going to trade neutral and trade flat the next week? Because we're seeing a lot of people closing out, but we're not seeing any adding going on. So this is something that we want to kind of observe. The massive volatility may be gone. And so the forecast of the massive volatility may be that it's over. So what we're seeing is just a lot of people exiting, because, one of the things about the options market is if it trades flat or trades just neutral, it doesn't help you either way. You need the volatility. You need the direction of movement to really be able to make your premiums increase. So we're seeing the same thing. A lot of people leaving the position, but not a lot of people adding on the call side, and then the same thing on the put side. OK, now let's look at the QQQ. Let's go to the chart. And what we're seeing on the 1 year, and we put what was going to be our support. Let me zoom in real quick. So we have this, what was going to be our support. We came up, what was going to be our resistance. We came up over it. We rolled a little bit, and now we're well down under it. So we really went down well under. I think this is around maybe the 337, maybe 338 was going to be our resistance. We came up under it. So now we're trying to figure out, are we going to ever move back up over it? I don't think we'll do it by the end of this month. So then we got to try to look to see whether or not it can retake that in June, because what we've seen is a lot of transition out of tech over the past few weeks, really the past few months. But we're just seeing a lot of selling on tech. Now, this is not down this bad as what we saw in early February. But, there has been a massive dip from where we were at, because we were over 340 at one time. So we got to really understand. So maybe a lot of the selling pressure has gone. They've allowed retail to come in. They've sold retail out of it. So then maybe they're going to start to accumulate again in certain positions. But we got to kind of wait to see, because like I said before, is that some of the larger tech companies are also in the S&P. And I personally, this is not investment advice, anticipate the market taking another big dump in June based on the seasonality platforms. Now, something that we want to talk about coming out, closing the month out. We're going into the Memorial Day holiday. And I was talking to somebody about this the other day. I was saying that I'm looking to fly, take a trip in, I think, September. And I was telling them that I was looking to buy the tickets early, which was going to be next week, because if the Memorial Day numbers come back really, really well, I think that they're going to essentially boost all the ticket prices up. So if we get back really, really good Memorial Day numbers, I think that they're going to kind of use it as an indication that the travel market is starting to rebound. They're going to become a lot more bullish. And as a result, the actual prices for tickets is going to go up. So we talk about in this particular article, right? So it is, do we have a date on it? So May 11th, 2021. And they talk about that they expect, and this is AAA, they expect a rebound in Memorial Day travel. So they have 37 million people expected to travel 50 miles or more from home, an increase of 60% from last year. And we know why the increase is so high, because pretty much last year, everybody was in the house because of COVID, right? But what we want to try to understand is that how was this number, the 2020 number, when they actually come out, how do they compare to the 2019 numbers? And then they have these as a particular road trips that they think people are going to take. And, AAA is a road publication. So they're worrying about people driving. Las Vegas, Orlando, Myrtle Beach, Denver, Colorado, Nashville, Tennessee. One of the things that they also talk about, I saw this here, is I think the gas price. So they were saying that gas price is going to be up. So here's right here that gas price is going to be more than $3 a gallon, but they don't think that's going to deter motorists. So now one of the things that we want to observe is that if the gas price is up, but people still travel, what it shows is that there's not a lot of sensitivity to the gas price. So then that can really create an increase now in gas, because what it's shown is that we can move up the gas price because nobody's really sensitive to it. If they decide that they're going to drive, they're going to pay whatever it costs to drive. Because what we want as we go farther into the summer is we want more cars on the road. So this is going to be a good indicator of the consumer's ability and the consumer's desire to want to move around using their car and to want to travel is going to be this holiday. So what we want to do is observe this holiday, because they may use the numbers to really, like we talked about before with the seasonality, they may use some of these Memorial Day numbers as a justification to put the market on the uptrend going into June, right? And that may be their justification that they use and kind of ride that momentum and ride that enthusiasm before they start getting ready to tank the market. So we may not get this perfect U shape where it comes back up. It may just go down and then stay down the rest of the month. But that's what I want to look for. So I'm trying to observe what news are they going to try to use to have us close out May strong, go into June strong, so they can set this thing up to go fall down again. OK, so that's pretty much going to be one last thing before we get out of here, is we want to observe May 25th is they're going to release new residential sales. March 2021, it was up 20%. And we know that the housing market is really, really hot, especially in certain markets of the country. So we want to continue to observe. Is that going to, are those numbers going to look better than the March 2021 numbers? We know they're going to look better than the last year's numbers. And then are we going to continue to see that the housing markets are continuing to boom and continue to increase in price? And then try to figure out, are we going to reach a particular point where the consumer is going to start to become sensitive to this increase in housing? Because the price of something cannot go up forever. Even though a lot of people anticipate that's how the market works, eventually the consumer is going to say, you know what, this price is too high and I just refuse to pay it. So that's pretty much going to be the weekend stock market talk. It's not a lot, because what we just want to continue to do is observe the volatility in the market. Is it going to continue to be volatile? Are we going to trade flat? Whether or not you want to be in the market this week. Don't believe that you have to trade just because there's a market activity going on. The market has to trade every day. That's their responsibility. The market makers have to show up for work Monday through Friday, but it doesn't mean that you have to trade. You can just sit back and observe it, do some charting, do some analysis, and, maybe sit this last week out, because you may have already hit your profit or your expectations for this month by now. So then don't feel any pressure to have to be in the market. Maybe you want to ride this week out and kind of see how we open up in June, right? So if you got any questions, hit me up in the comments. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.